Jeff, Zach, thanks for joining me.
Hey Steve, thanks for having me again.
Yeah, thanks for
Good
having
to
me back.
good to have both of you. Talking a little China real estate, one of the biggest real estate markets in the world with reverberations for the global economy. Um, the government seems to have kind of broken that housing market, and despite a recent rescue effort, doesn't seem to have fixed it. China's May economic data suggests that there's a lot to do to continue to try to grow the economy. We're certainly seeing them trying to pivot away from real estate to more manufacturing export driven businesses. But we're seeing some tariffs and stuff, and as a reaction to that, of fears or concerns that they're really kind of undercutting pricing, perhaps even being predatory and pricing things at below the actual production cost of those goods to try to get that going. Real estate, we saw a $41 billion relending program launched by the People's Bank of China to provide funding to Chinese banks to support home purchases by state-owned firms. The hope there was that would step in as a buyer of last resort for millions of properties, and mop up some old and sold inventory and persuade home buyers to re-enter the market. We're just not seeing that happen of home buyers really re-entering that market. Um, we're still seeing very weak buyer sentiment there. We're seeing major cities' new home prices fell 4.3% in May, so we're still seeing prices going down. That's worse than the 3.5% decline in April. Um, and prices in China's secondhand home market tumbled 7.5 compared with 6.8%. So things still seem to be going down, and that's after home sales by value tumbled 30.5% in the first 5 months of this year. So it doesn't look like we found a bottom. Some your thoughts on a government managed real estate sector not doing that well.
I mean, look, it sounds to me more like a house of cards. You just one side is buying something from the other side just to make sure that it doesn't fail, and that side's not really sure if they're going to be able to do anything with what they're buying. I think a lot of this is probably just is a product of stemming from one of those other articles we did previously, where you've got huge vacant cities that China built up, where you had a robust construction industry that really wasn't as robust because it's just fake housing. So I don't know. Look, I think the reality is you're going to continue seeing things fall, but it just maybe China wasn't actually the one of the largest economies anyway. It was just kind of a smoke and mirrors.
Huh.
Yeah, I think there was some smoke and mirrors. I think for the states, one of the things you're going to continue seeing is the money that can get out of China is going to try to get out and do things
Oh,
like buy U.S. real estate or buy real estate in markets that have more actual markets with buyers and sellers and less manipulated by the government. So but the challenge there is the government is trying to lock down that capital and keep it from being able to leave.
well, let me ask a question. I mean, you made the point, stability, without saying the word stability.
Yeah.
Um, how does it relate to like Fannie Freddie in the US? I mean, Fannie and Freddie are a buyer last resort, but we're buying and selling mortgages, packaging them up, and they're not quite there yet. They might be early innings in their housing market, but I mean, is there a comparison there?
I think there's a comparison anywhere where you have like state intervention and mispricing of things and avoiding market mechanisms to fairly price. But the order of magnitudes are just so different in that in the US you really do still have functioning market economies to price things by and large. I mean, certainly 2008 showed what could go wrong
Yeah, there
when
you go.
we got a little too involved with trying to price debt and trying to regulate banks and whatnot. And we still got some problems, I think we see with the move to too big to fail. Um, but it just pales in comparison
Right.
to the Chinese market, where, as Jeff pointed out, we've seen entire ghost cities built up with state financing and state funding, and then restrictions that really force people to have to put the money into real estate and not have too many other options. It's probably created the biggest real estate bubble in history. Um, and yeah, good
Well,
luck trying to
if not
manage that popping.
Well, if not worse. I mean, this article is really about their own form of quantitative easing, right? In some ways, and that they issued, I think it was like 1 trillion yuan, the equivalent of like $138 billion, and what I think it was in ultra long sovereign bonds. Why would anybody want to buy those if you're seeing and reading this article where the entire economy is
Yeah,
collapsing?
there's nothing behind it.
Yeah.
So
Yeah, I think that's really what we're starting to see with China is that a lot of this was a smoke and mirrors. A lot of this was government buying from government or government businesses buying, and investors that had no real options in terms of where to put the retirements because of government restrictions. And one of the issues too with real estate is putting a building together can create a lot of GDP growth right up front, right? But if you have a non-productive asset at the end of the day, a building that's just sitting empty, long term, that's a pretty negative on your GDP. And we're certainly seeing the Chinese economy starting to slow down, and they've got some big issues between demographics, a slowing population, them never making it up the ladder to where they're really producing a lot of goods based on innovation rather than being a producer of low cost. Um, and now they're trying to fire up the export models markets again, but it's not pre 2008 where, in this country, we're allowing people to tap home equity to be able to buy an extra speedboat or stuff like that. So the export markets aren't what they were pre. Uh, this is going to stay interesting, but I think we might be watching the slow motion end of the Chinese miracle here.
Steve, what do you got against speedboats?
I got nothing, but it didn't end up well in '08 where we made it a little too easy to tap non-existent equity um, on
Yeah.
that. But I think that's also one of the issues here is we kind of took our medicine. We had a bad recession. We got through it. We dealt with most of those issues. China didn't. They just went bigger and badder, and now they've got something that dwarfs '08 on their hands that
Well,
they're still trying to manage.
let's see what happened.
Okay. Hey, if you enjoyed this video, give us a thumbs up. Throw in the comment sections any thoughts you have on China, government, markets, real estate. Um, Thumbs up on the video, subscribe if you haven't, and visit our website, selectfincap.com for exclusive real estate deals. Thanks a lot, guys.
Thanks,
Thank
Steve.
you.